The broadcast is now starting. All attendees are in listen-only mode.
Welcome to Optimum Solutions webinar about balancing and completing Form 941. My name is Susan Warren, and I'll be your presenter today, and Sherry Dwyer is here with us today too. It's true, at least as far as the IRS is concerned, that numbers are perfection. And today we'll discuss how you can make sure that yours are. Our agenda today includes a discussion of why to balance payroll, where to start the whole process, why and how to balance each pay period, why and how to balance each month, why and how to balance each quarter. We're going to talk about completing Form 941, and also for those of you who have to do that, completing Form 941 Schedule B. So we're going to start out asking the question, why should you even bother to balance your payroll? The computer does it, so it should be correct, right? Well, of course, the most important reason for balancing your payroll is that you want to make sure you're paying your employees correctly. You've heard me say it before, no matter how much your employees tell you that they love you, the reason they really come to work is because they want to be paid correctly for working. So you have to be sure that your gross to net calculation is correct. And that starts with the worked hours times the pay rate. And then you have to be sure that you withhold and deposit the correct taxes and deduction amounts. And once you've calculated your gross and your deductions and taxes and arrived at your net, then you have to make sure that all of those amounts that you're posting to your general ledger accounts are posted to the proper general ledger account so that your GL balances and your audit trail remains intact and you keep all your financial folks happy. And of course, a balanced payroll will ultimately make timely tax reporting simple. All of the numbers that you need for your tax forms should already be perfect if you balance every payroll, every pay period. But that sounds like a lot. So where should you start? Maybe you can do that for one pay period, but how can you know you have a handle on balancing a whole month, or worse yet, a whole quarter? Well, balancing each pay period is naturally the easiest piece. The first step towards consistent and timely reconciliation is comparing the current pay period to the previous pay period. Do the numbers look consistent from period to period? If you look at your current pay period's regular hours, does it seem to fairly well match the regular hours from the last period? Or overtime? Do the overtime hours look about the same from period to period? And if they don't, can you explain why? Do you know that you had a lot of overtime worked in one period or another? Do you know that you had a holiday in one pay period so that a lot of people took a lot of vacation hours around that holiday? Can you explain the differences from period to period? That's going to be the first and probably the easiest step to your consistent and timely reconciliation. Now, over a whole month, if each period is in balance, there shouldn't be any issues, but you should also look at your general ledger accounts to help you keep this reconciliation. And in particular, You want to look at tax liability accounts. These should normally be zero, or you may see one tax deposit due if you still have something to submit to a tax entity. Same with deduction liability accounts. Again, these should be zero, or you may see one last payroll if you've not paid over amounts withheld to a payee for a deduction. But you always need to know why there's a balance left in this deduction liability account if you see a balance there. Accrued wages account. This should be zero after you've made your payroll. And for those of you who operate under a cash accounting method, you have a payroll cash account. This account should also be zero, or you should understand why there is any balance remaining in that account at the end of a month. And any other miscellaneous accounts that might be related to payroll. Understand why there are balances in those accounts if you see any. Accurate taxability of deductions and benefits and earnings codes will result in accurate tax calculations. So you need to constantly perform checks of the taxable settings on those items. With every pay period, confirm that your deductions are set up correctly to either be pre-tax or post-tax. And the same goes with benefits. Check those settings to make sure taxable benefits are flagged so that they will be included as taxable wages for the correct taxes. Now remember that some benefits may be taxable for federal income tax, but not taxable for things like local income taxes or maybe state unemployment taxes. Mistakes in the settings of these deduction and benefit taxability flags are perhaps the most common mistakes that we see at quarter and year end in your support department. Also, check your earnings codes for taxability, especially if new earnings codes have been created during a pay period. Remember the equation for calculating taxable wages: gross less non-taxable earnings less pre-tax deductions plus taxable benefits equal taxable wages. So make sure these items are flagged correctly for taxability, and you're going to make sure that your tax deposit is correct every pay period. With every month, keep a reconciliation that shows pay period to pay period as well as month to month. Review any new deductions or new earnings codes or benefits to make sure that the taxability flags are set properly. It's much easier to correct errors if you find them sooner rather than later. Believe me, it's much easier to correct a tax flag for one pay period than it is for a month or a quarter or a whole year. And balancing every month, remember that some states, thank you Illinois, require that some of their tax reporting has to be done monthly instead of quarterly. So you've done your balancing every period, every month. Go ahead and continue to expand your reconciliation to show pay period to pay period, month to month, and finally quarter to quarter. You're tired of hearing me say it already. You think it's overkill, but I'll say again to check the taxability flags on deductions, earnings, and benefits, because the most common cause for balancing errors on tax reports is incorrect tax flags on one of these items. So let's take a look at the actual Form 941. The top of the form is the easy part, and that's where you identify your company and the quarter that you're reporting. Now, this information has to match what the IRS has on file for your federal ID number. You'll put your federal ID number and the name that's registered with the IRS, also your trade name if you have any, and your address. And over on the right-hand side, you'll check the quarter that you're reporting on this 941, and they define which months fall into which of the 4 quarters. So we're going to start with Part 1. Line 1 reports the number of employees you paid on the 12th day of the last month of the quarter. Line 1 even identifies for you what is the last month of every quarter. Just in case you didn't know, March is the last month of quarter 1, June the last month of quarter 2, and so forth. So they want you to identify the number of employees you paid on March the 12th, June the 12th, September the 12th, or December the 12th. That's the number that goes on line 1. Line 2 reports federal taxable wages. Note, this is not gross wages. This does not include wages that are not taxable for federal income tax. It doesn't include deductions that are pre-tax for federal income tax. So you should subtract non-taxable wages and pre-tax deductions that are not taxable for federal income tax from the number that you put on line 2. That is federal taxable wages only. Line 3 reports federal income tax withheld from employees during the quarter. And line 4 should be checked only if there are 0 wages subject to Social Security and Medicare. So probably most of you will skip line 4 and go straight to line 5A, which reports taxable Social Security wages. Remember the equation: gross less non-taxable less pre-tax deductions plus taxable benefits to get to your taxable wages. And then line 5A applies a factor of 0.124. And this factor represents the combined rate of 6.2% for the employee and 6.2% for the employer that's applied to taxable wages. Taxable wages in 5A column 1 times 1.24 should equal the combined employee and employer Social Security tax reported in 5A column 2. Some of you will also complete line 5B, which reports taxable Social Security tips using exactly the same equation as line 5A. Line 5C, column 1, reports wages that are taxable for Medicare, repeating the same gross less non-taxable wages, less pre-tax deductions, plus taxable benefits calculation. A factor of 0.29 is applied to the wages in column 1, and that represents the 1.45% tax for the employee plus the matching 1.45% for the employer, and the tax amount is reported in column 2. Line 5D is relatively new to the 941. Well, it's new if you've been doing payroll as long as I have. And there you will report wages and taxes in columns 1 and 2 respectively that are taxable for Medicare over $200,000, still applying the gross, less pre-tax wages, less non-tax deductions, plus taxable benefits. The wages are multiplied by a factor of 0.009, which only represents the employee paid tax, as there is no employer match on this. And if you'll remember, this is a result of the Affordable Care Act. And there is discussion currently that this could be part of the Repeal and Replace American Health Care Act. So there's talk that line 5D may eventually go away, so just keep that in mind. Line 5E is a total column, total of column 2 for lines 5A through 5D. I'm going to page back up so that you can see these lines. Line 5F will be important to you if you have tipped employees who failed to report or underreported tips to you. Now, the IRS may be notified from reporting directly from the employee or by auditing the employee that these tips went unreported. And if that happens, the IRS may send you a Section 3121Q notice and demand to let you know about the situation. And if you receive this notice and demand, you need to report those wages on line 5F and also on Schedule B. However, the employer is not responsible for their portion of Social Security. And line 6 is a total of lines 3, 5E, and 5F. And this is the total taxes before you make any adjustments. Line 7 gives you a spot to enter an adjustment, either positive or negative, that can account for rounding or fractions of cents. And an example of why this can happen might be when your pay rates are extended to 3 decimal places. At some point, wages and taxes will necessarily be rounded to 2 decimals because that's how they have to be paid and reported, with 2 decimals. So there may be some truing up that you need to do to get your numbers truly perfect. Line 8 is an adjustment spot for entering the employee portion of taxes withheld by a third-party sick pay administrator. You would also include these amounts on line 5A and 5C and 5D if an employee earned over the $200,000 Medicare threshold. Report on line 9 any adjustments for uncollected taxes on tips when the tipped employee did not make enough money to cover the taxes. And also, and this one's a little obscure, but I have seen it happen, also on line 9, report the uncollected employee portion of Social Security and Medicare taxes on group term life insurance premiums paid for former employees. On line 10, total your tax adjustments on lines 6 through 9. Now, line 11 deals with a special payroll tax credit for qualified small businesses, and we are actually not going to get into those details during this webinar. Line 12 is the result of your total taxes after adjustments and credits. Subtract line 11 from line 10. And on line 13, enter the total deposits you made during the quarter. And this should include any overpayments you made for any reason. Maybe you had money to apply from a previous quarter or as a result of a 941X that you had filed. If line 12 is larger than line 13, then line 14 is the balance due. If line 12 is less than line 13, then line 15 is the amount of your overpayment, and you should indicate if you want to request a refund or if you want to apply the amount to your next return. So we're going to move on to Part 2, Page 2. At the top, of course, you're going to repeat your legal name and your federal ID number, just like it was on Page 1. Before we look at these lines, you need to review the basics of payroll tax deposit rules. And I'm going to go over this very briefly and not in a lot of detail. But if you're filing a 941, you are either going to be a monthly depositor or a semi-weekly depositor. And this is going to be based on your total liability for federal income, Social Security, and Medicare taxes during a look-back period, which generally lasts an entire calendar year. If your liability for your look-back period is $50,000 or less, you will be a monthly depositor for the next year. If your total liability exceeds $50,000, you will be a semi-weekly depositor. And if your liability reaches $100,000 on any day during a monthly or semi-weekly deposit period, your taxes must be deposited by the close of the next business day. And this instance carries additional impact because once this rule takes effect, it can change the type of depositor you are for the rest of the calendar year. Because a monthly depositor who accumulates a $100,000 liability on any day during a month becomes a semi-weekly depositor for the rest of the year. So just a little refresher there on the basics of payroll tax deposit rules. So back to the form, line 16 will identify what type of depositor you are. And it starts out assuming that you haven't met that $100,000 rule. It's going to refer back to what type of depositor you are depending on your tax liability for the current quarter, and looking back to line 12 of this current form, the result of your total taxes after adjustments and credits. Now, if your line 12 is less than $2,500 and you did not incur a $100,000 next day deposit obligation during this current quarter, that's considered de minimis. So check the appropriate box on line 16 and move on to Part 3. Monthly depositors should enter their accumulated tax liabilities for each month of the quarter and a total for each month, and then they'll go to Part 3. And semi-weekly depositors should check the appropriate box, and then they will complete Schedule B. Parts 3, 4, and 5 finish out the form. In Part 3, you're going to let the IRS know if the filing business is closed or is a seasonal business not filing for this quarter. And if you want to let someone designated by you discuss the return with the IRS, check yes and fill out Part 4. And always complete Part 5 with an official signature and any paid preparer information if that is applicable. So here's a picture of Schedule B, or at least the top part of Schedule B. And again, we're repeating the employer, federal ID number, and your legal name and the calendar year. And over here again, we're identifying which quarter is filing for this particular return. And for those of you who are filing a Schedule B, you will see month 1, and again, there's month 2 and 3 will be repeated. But for every day of the month, for every possible day in a month, you're going to see 31 boxes and then a total box. So if you ran a payroll every day of the month, you could incur a tax liability, and you would need to put that tax liability in the appropriate date, the box for that date, and then add up all of those liabilities and put a total for each month. If you ran a payroll on the first day of the month and the last day of the month, or the 15th and the last day, you might just have liabilities in 2 boxes, but you'll put the tax liability on the appropriate date for the appropriate box, and then the liability for the entire month. Here's month 1. And then you see the same thing repeated for months 2 and 3. And then, of course, down here at the bottom of month 3, we see the perfect number, the total tax liability for the quarter, which should match line 12 from Part 1, total taxes after adjustments and credits. So page back up so you can see this is where your perfect number comes in. It should match that perfect number on line 12 from above. If you've balanced your pay periods and your months and your quarters, that's going to make this number perfection, and everything's going to be wonderful. Thank you for joining us today. We hope you've learned some tips about balancing and completing Form 941. Please be on the lookout for more of our educational webinars soon, and we hope you have an optimum day.